Thank you, everybody. Good to see everybody tonight. There's some names and faces I recognize. I usually like to do it with the cameras on so that I can see you. I really like to interact with the group. It makes it all the better. I see some names. Paul, I guess you're up here in Boston, right?
I'm up here in Boston with MIG.
Okay, yeah. So good. I'm glad I've got somebody that is familiar with the business so I can ask questions of you. I see Sean Kressler's on here. Sean is, we spoke last week. How are you, Sean? You hear me? I don't know if you can hear me or not. So, and Kenneth, you're in the business as well. You're a debt guy, right?
That's correct. Yes.
Is that, who do you work with?
Baker Collins,
Okay. All right. Where are you located?
Atlanta.
Oh, all right. Great. All right. Well, look at we're all here. Other people will come in and come out as we go during the meeting, but let's get started. The goal here today is to talk about financing a multifamily acquisition today. We have different levels of expertise. No hard questions from the guys that know what they're doing. Just kidding. And but anybody that has questions, I'm open, and we've got an intimate group where we can talk about whatever we need to throughout the process. So, um, obviously, Jeff just sort of went over my resume a little bit, and I don't want to bore you with it. My day job is managing director of Marcus and Millichap Capital. We're a New York Stock Exchange traded firm, and I head up capital markets in New England. We actually are a national firm, so we can basically source debt for you anywhere in the country and even up into Canada. I think we have someone here who is from Canada. So we have a lot of capabilities, and we'll talk about how that benefits uh, the folks that I work with and teaching them how to obviously invest in multifamily properties. Um, also 30 plus years in finance and real estate, and I will tell you, certainly it's been really more than 30 years, but I tend to keep it at 30 just to keep myself looking a little, appearing a little younger than I really am. So I financed about 3 billion in debt and equity over my career. If I tell you how I started, I'm amazed how I started. And it basically was being on the equity raise team for Rockefeller Center Properties when I was a senior vice president with Lehman Brothers. And that cut my teeth on multifamily or investing in real estate finance. I ran $100 million hedge fund. It was a mortgage portfolio where we bought distressed mortgage assets for residential, and that went splendidly. But I'll tell you what the outcome of that was. I founded an investment firm called AmericaVest Capital. We're right now in the throes of an acquisition of an actually, Paul, a property here in Boston, which is an amazing property with, I'll tell you a little secret. I managed to secure 5% interest only financing on the deal, seller financing for 5 years. It's 75% loan to value, which is over $4 million. It's about a $5.5 million property. I'll share more about that later, but these are some of the strategies that we show and teach investors how to employ. And I have my MBA from a small school in Chicago called Kellogg, part of Northwestern's graduate program. And that's going back quite a few years now. So I don't know. I think Kritzy said I may not be sharing the screen. Do you guys see my screen now? Can everybody see my screen? Is that working?
Yes.
Yes? Okay, great. All right. So anyway, that's me. I think I'm actually wearing the same suit in that photograph that I'm wearing now. This is a pretty recent suit. So anyway, all right. So look, we're going to show you how to finance a deal like a pro. We have ongoing programs where we do have networking events where we all get together. We did one back in April here in Boston that sold out. We've got another one coming up in Miami later in the year and one planned also for Texas. But those are TBA. We've got a half a year to get those in. So any of you that want to learn more about those, you can find that information on our website when we announce the actual dates. So anyway, this is a picture of me telling you really how far back I go. This is me in 1988, I hate to tell you, as a senior vice president with Lehman Brothers. And has anybody here, show of hands, seen the movie The Big Short? I'm going to tell you a story that'll make the hair stand up on the back of your neck. Okay, Leo, Bob, anybody else seen it? Okay. Well, look, it's about the subprime market meltdown. Kenneth probably is very familiar with it, which occurred in 2009, 10, right around that range. And I not only have seen the movie, but I actually lived it. And I mean, I lived it. There's a scene in the movie where he has to shut down the fund. I had to shut down my $100 million fund because the collateral in the portfolio became worth less than the actual distressed debt that we acquired at a discount. And it was a disaster. And my entire net worth, because, let's face it, guys, I never imagined I'd lose a single dime in US residential real estate, but I had a ton of dough. I got pretty wiped out and I lost everything. I ended up with two teenage daughters, single dad, uh, relying on credit cards to live. But I had to take my skill set and really hone that skill set to be able to rebuild my net worth and be able to acquire properties with little or no money. I only could use my skill and my tactics. And in the very first deal that I acquired, I created out of thin air $1 million in net worth. And if any of you have done a syndication or know how to do a syndication, you know it's totally doable. And that's what I did. And I'm going to tell you a little bit about that. But it was an amazing time where we really had to scramble to be able to get back on my feet. But let me tell you what I do every day. I really have an expertise on the finance side. There's a lot of gurus out there that are always talking about helping you to get your first multifamily deal. But I have a saying, and the saying is at the end of all, show of hands, who here follows me on Instagram? Anybody? Anybody here? Okay, Leo does. And if you don't, you should. And Leo will tell you if you watch the videos, at the end of every video, I say, remember, it's all in the numbers because this is what I do every day, guys. It's all in the numbers. Every deal, every deal that comes along, it always ends up being a conversation about the numbers, how the deal is going to be structured, what are the cash flows going to look like, what's the debt service coverage ratio, and then what are the returns to potential investors or the owner, whoever the case may be. But this is what I do every day. For example, Paul, you might be familiar with the Marriott out in Springfield, Mass. It's downtown. It's near the new casino. I
Yes.
financed that for 24 million. Okay, it's right near the Basketball Hall of Fame.
Yeah, I know it very
Also,
well. I stay there.
you're familiar with it?
I stay there.
Yes?
Like I worked for Marriott for about 25 years actually, so I'm familiar with
Okay.
that. Yeah.
Well, if you haven't been out there, Paul, go see it because they completely did it over down to the studs. It's absolutely beautiful. They did a wonderful job.
So
I financed a 13, hello? Somebody's got some background noise. I financed a 13.75 million this was a conversion to office from you can see it's a little dated because of the rate on it. Office to warehouse to office. This was, and this one next to it, 9.2 million, was a ground up construction for multifamily. And two or
I'm
three other,
gonna,
somebody's got their background noise on, guys, so it's hard for me to speak.
just
Jeff?
response, because I was gonna get, oh, sorry, my bad, I'll be right back.
So this is what I do all day, every day. It's finance deals. So I really am an expert. But my bold promise to you today is to learn how to finance like a pro. So you too can build wealth, earn passive income, and create massive tax benefits. In fact, the deal that I'm working on right now, we've discovered, not discovered, we did the evaluation, had the evaluation done. It has $730,000 in bonus depreciation for year one. And what's exciting about it, and I'm just kind of jumping around a little bit here, but what's exciting about that, guys, is a week ago, prior to the big, beautiful bill being passed, there was only 40% deductible. So let's say for every 100 grand, you got 40,000 in tax benefits. You could only take 16. You now can take all of it, 100% for 2025. So if you need tax deductions, that's a huge opportunity. The other, we're also going to help you learn how to get a deal under contract in as little as 3 months. And you never want someone that tells you that they're going to get you closed on a deal in 3 months or a month or maybe even 6 months, because I can tell you that you can get a deal under contract, but number one, you don't even know if it's going to close because it's under contract. You get into due diligence. Maybe you find out it's got, from a phase one environmental report, it's got contamination. and you don't close the deal, or you don't get financing or whatever. So I would never promise you that I'll get you to close a deal in 3 months, but I will tell you that we pretty much can help you if you do some work, get a deal under contract in as little as 3 months. And one of my students was going to be on tonight. I don't think he made it, but he's currently working on a deal he just put under contract after 4 or 5 months, 4 months in the program. So look, stay until the end. There is going to be an offer for you guys. It's not a sales pitch or anything, but we're going to talk about how I can help you to learn the craft, the skills, and how to finance deals, and the program that I have to do it. Nobody's obligated. Nobody's going to hard pitch you. It's actually an application process. But stay on till the end, and I'll share with you a book called Capstack Fundamentals. Now, they tell me this is worth money now because I actually wrote it. It's not Chat GPT. I wrote this book some time ago. It's just an ebook. It's pretty short, but it's on the fundamentals of a cap stack, which is the basis of anything you do on how to structure and manage risk in an investment deal. Also, there are industry terms, and I think Kenneth, who's in the business, will appreciate this, probably Paul as well, maybe others of you. But if you don't know the language, the lingo of the industry, I think you'd agree, if any one of you wants to pipe in, that's going to leave you kind of out of the game. Because if you call a seller or you talk to a mortgage broker or you speak to a realtor and you don't really know what the heck you're talking about and don't know the right terms, you're absolutely going to be out of the game. Do you agree with that, guys? Anybody? Paul, Ken?
Yes.
Yes? Right, okay.
Yes,
So I've added industry terms here for you to know the lingo of the industry. You'll get that for free. The other thing is I included a 2025 Marcus and Millichap Multifamily National Investment Forecast. This is helpful for you folks who are starting out, especially when you want to determine your buy box, what market you want to be in. It lists ranks the top 50 markets in the country. Number 1 is Miami right now. Number 15 is Boston. But if you're trying to pick an area where you want to go, it can guide you. It's demographics, growth, rent growth, all the important factors to a real estate market. So you'll get that as well, whoever stays till the end, okay? So the one thing today I'm going to show you is, as I mentioned, is how to create net worth out of thin air. And it is truly doable, even with no money or credit. And sounds kind of cheesy, but it truly can happen if you know how to structure a deal and put together the appropriate cap stack. Here's the first deal that I mentioned to you a moment ago. I still own these units. Paul, I don't know how well you know North Providence, Rhode Island, but these are on County Street and Talbot Street in North Providence. I acquired these two doing a syndication deal where I raised the equity and obviously got bank financing, still other people's money. And by structuring it the way that I did, I created net worth, $1 million in net worth out of thin air. I'll see if I can go into that with you in another one of these slides that we're going into now. But let's talk at this point about, and I still own these properties, by the way. They're beautiful properties, great workforce housing, and they're still cash flowing nicely. But let's talk about 3 secrets that I think are important to kind of fast forward you guys as to where you need to be able to be successful in this business. And it truly is an amazing business where you can be successful, highly wealthy. I have clients worth $100 million that have been just buying small apartment complexes their whole lives, 10 or 20 years, and you have just racked up the net worth. But let's talk first of all about underwriting made simple. I'm going to share with you guys what is really work product. This is it's not fancy. It's actually probably a bit confusing, but I want you to know that we don't sanitize our work and send it to you. This is the stuff that we use every day to look at deals. So here's a spreadsheet that I use that allows you to underwrite a quick underwrite on a deal and get a quick valuation on a deal in under 5 minutes. And you do it by obtaining a small handful of basic, easily accessible information. And by inputting it, this calculates this program into the yellow areas. And that will give you an idea whether or not you should waste your time on a deal, or whether or not you need to pay a different price, or whether or not you should just pass on the deal and move on to the next one. And for any of you that have an understanding of the business at this point, I can truly tell you the ability to be able to compress that time and to be able to look at a deal quickly and then move on if it doesn't, not waste time is critical, a critical component to your success, okay? Anybody have any questions so far? And I'm going to get into this. Okay, we'll get questions on the end. So this is actually the 24 units that I just showed you on the screen that I own currently. And all we input here was the average rent. So we took the rent roll and we added up total rents for the month and then divided by 24 units. And the average rent was $1,118. And I might point out that we were about $200 at least below the market. I input 24 units here. And you see, this can change. See, all you got to do is input the numbers. The 1118, if that was 5,500 or 5,000, but it's not, it's 1118. So this calculates for you, really simple and easy. These are your monthly rent, and that extrapolates out to the annual rent or top line revenue for the property. So now we're going to plug in a vacancy factor. If it's 5% or less, just use 95% occupancy. If it's greater, you can change it to a different number. As you can see, these whatever you need to put in there. Easy information. Then any additional income. The property has laundry and so forth. So we estimated about 5% of the revenue, additional revenue comes into the property for 105%. And to add that to the top, this number, you just make this a 105 or a 103, whatever the number is, okay? And it will calculate that for you. This is pretty simple stuff. Now, this is where a little guesswork comes in, believe it or not. Remember, this is a phase one of our underwriting. We have a phase two in-depth underwriting model, which I think I'll share with you, maybe not. But now we want to just say, okay, so here's a relatively medium-aged property. What do we estimate the expenses are? And we know that we pay heat and hot water, so we're going to say if it was a new property, they might be 30%. If it was a middle-aged property, 40, and an older property, perhaps 50. So we're going to pick 40%. We're trying to just estimate how this deal works. Now you have inputs here where you can change the price, you can add any closing costs, an LTV, as well as an interest rate. Now you'll note the rate here is 375. Well, that was the rate when I did this deal. So what's interesting to see and why the market has slowed down so much and why opportunities are coming up is look at this deal here. What we're looking at is that right here is your debt service coverage ratio, 142. Does everybody see that? Can that, you show of hands, can everybody see that's what's calculated here? Right, okay? And if we change this, it changes your debt service coverage ratio, any one of these input factors, okay? But what we're looking at is a 142 debt service cover, and this is your cash on cash amortizing return at 628. It's a little messy, but it gives you the data that you need. And what am I getting at here? I wanted to talk to you, first of all, that we did pay 3.5 for the property. We did have 4% in closing costs, and we did have a 75% loan to value. So this deal looks quite good. If this was just an initial look, that's all we got to do, guys. Wow, at 3.5 million, it's got a 142 debt service cover, which is super important. You need to understand that that's one of the major factors on whether or not a deal will work. And then look at the cash on cash return. Two critical factors for round one in underwriting a deal. Now, let me show you something interesting. We've seen rates go up recently, right? So if you were to take this, if I paid 3.5 for it, and I were to take the current rate of 6.5, wow, look at that. It doesn't even debt service at 6.5. This has been what's going on, guys. We never would have been able to pay 3.5 for that property at 6.5% interest rates. And it had a negative cash on cash return. So the interest rates are a major factor here in any investing you do. And you can even change the pricing in here without messing this up. And that'll change your cap rate here in this factor area here. So bottom line, all this is a quick calculator. It's got more moving parts to it if you're doing monthly seller financing, balloon, or monthly payments, etc. But I'm showing you the bank version of it, and it will allow you to make a quick decision on a deal. Does everybody see that? Anybody? You see that? I see you writing in the chat box. Okay. Okay, so now question for you guys. Looking at this deal, looking at a 142 debt service cover, I want to see a show of hands, please, and a cash on cash return of 6.28%. Would that be something you think would be worth pursuing? Absolutely. Thank you, Kenneth. Absolutely, Paul. Absolutely, Leo. Uh-huh. Yep. Jessica, yes. Those are the two factors. You've got a treasury. Where'd the 10-year close today, Kenneth? Do you know?
At 4.3, I believe.
Four,
could be
three?
wrong.
Okay, so if I can get 6.5% here, I'm doing better than a 10-year treasury. Probably should compare it to the 5-year because it's a 5-year deal. But at the end of the day, you're still going to be. So if I'm getting a better return than a treasury, upside in the deal, tax benefits, and yeah, it makes sense. And you can also evaluate this really quickly, guys, and then I'm going to move on. Just look at the cap rate versus the interest rate. If this interest rate was 6.5, that would be negative leverage because my interest rate is higher than my cap rate. Whereas conversely, if it's below, it's positive leverage. And if it were a 550 interest rate, you'd have neutral leverage on the deal. But you already know if you've got 6.5 money and you're buying at a 5.5 cap, that's not going to work. Everybody get that? Right? Deal's going to have a hard time working. Now, there are other factors that come in to play, but that's that. So look, I'm going to move on from this. Anybody have any questions on this real quick before we close this out? Nobody? Okay. Well, Grant Cardone says go ahead, what's that?
Yeah, I was gonna say, I have a quick question about the expenses ratio. I I was under the impression that most banks would like to see somewhere around some of the banks would like to see somewhere around 30% plus, right? Is that accurate? Do we because you went
Can you repeat
40%?
that question one more time? I didn't,
My
you
question
broke
over
up.
there is like, let's say you have a class. I'm coming back to what you say about the expenses ratio.
Yeah.
If you have a class A building, um, where would you put the expenses over there? 40 or 30%?
I would go with a Class A newer building. I'd go 30.
Okay, thank you.
Maybe even 25. That's what I'm saying. It's just,
Wow.
again, this is phase one underwriting. It's just a guess. You looked at it, you pulled it up, you got the OM, or you saw it online and you're saying, okay, where does this deal work? And this gives you an idea. So now it's worth, as we can all see, it's worth putting more effort into full underwriting on this property, which includes detailed expenses and so forth. Now, all of this spreadsheet and the detailed underwriting models are all available on our platform, which I'll share with you in a little while, that give you free access to that stuff if you're a member of our mastermind. Any other questions before I close this out? Okay, great. All right, so let's now talk about the next stage. So we've done a quick underwriting, and yes, I'm going to jump ahead, and we're not going to even do the phase two underwriting. It doesn't apply here today. We may look at it later. But what we want to look at now is well, how do we get, we got to raise some equity on this deal, and is it going to work for our investors? So I'm going to show you a syndication waterfall that we put together for all of our deals that allow us to determine, and this is hard to do because it's on a small screen, but it allows us to determine rates of return and whether or not a deal makes sense for investors, okay? Now, this is the actual waterfall for Talbot and County that you saw above, and I'll kind of see if I can run through it quickly with you, but this is the next step in the process once you've determined you want to buy a deal and if you want to syndicate it. Now, this is an 80-20 split, and it can be anything you want. It can be 70-30, 80-20. But the bottom line is it has to generate the returns that investors are looking for. And that would be, somewhere around a upper teens to low 20s on an IRR basis, cash on cash of around 6 or better, and then a decent equity multiple. And now, if I look at this, this is the A share investor returns. And this is the B share investor returns, and the B share is the GP, and the A share is the LP investors. And I'm going to show you a specific LP investment here in a minute. But let me ask you guys a question. Does everybody see down here below? And remember, this is a finance course. So we're looking at how we can create returns for ourselves, and then ultimately as well, make sure we create reasonable returns for our investors. But if you'll note here, these are basically infinite returns. I had to put $1 in here because this was a deal I was able to do with no money because I worked with investors. Now, anybody here know what an acquisition fee is? Familiar with that? In a syndication?
Yes.
Yes, Leo does, okay. Well,
I'm with-
look, for those of you that aren't familiar with it, the acquisition fee is anywhere from 3 to 5% of the purchase price of the property, where you as the sponsor are allowed to charge that, and your investors don't have to pay it, they just don't do the deal. But that's what you're allowed to charge. That's reasonable. And in this deal, we did a 3% acquisition fee, which equates to 3% of a $3.5 million purchase is 105,000. So how do we create net worth out of thin air? Not only did we create net worth out of thin air as a GP, but also we created net worth out of thin air because we syndicated and structured an acquisition fee. I want you to notice this is a breakdown of each of the investors in this deal. And right here is me. Is $100,000 that I didn't have going in, but coming out, I had $100,000 to invest. And I was able to put that in the A share alongside my A share investors. So not only am I getting the economics of the B share GP running the deal, but I also have $100,000. Now I could have taken that as cash, but I decided to put it back into the deal, which is fairly standard. Okay. But the key here is honestly, you really need to make sure a deal works because you want to make sure that you're creating investment returns. A, that you're going to be able to raise equity capital for, and B, you want to give obviously investors a reasonable return on their investment dollar. Because if you're only doing it for a structuring fee, don't do it. It's not the right thing to do, and it's not appropriate for investors. But does everybody understand the acquisition fee and how that alone created $100,000 in cash flow and equity for me? Everybody see that? Got it? Okay. Basically, guys, without going into too much detail on this, oh, Sean Sullivan's on here. Hey, Sean, how are you? I've been trying to catch up with you, man. I left you a couple of messages. Give me a call, please. You there? Can you hear me? Ah, there he is. Anyway, Sean's come to a couple of my webinars. I wanted to catch up with him. But anyway, needless to say, what you have here is a situation where if you look at the economics here, the breakdown on this deal is a 80-20 split. And once we hit a 10% return on the cash flow to investors, the split changes to 60-40. So for all intents and purposes, for simplicity's sake, as the GP, I ultimately end up with 40% of the deal. Well, the deal was purchased at 3.5. It's probably worth $5.5 million today. And we owe about $2.6 million on it. So that's about $3 million in equity in the deal. At a 40% capture on that, from my standpoint, that's over $1 million if we were to cash this out today at that price. So there are other factors. It's probably not as high as 1.2 million, but when you consider my stake in the deal, my equity, and then the ownership of that 100,000, which is slated to double, there'll be $1 million in net worth for me out of a deal which effectively put no money in. Does everybody see that? Got it? Okay. And I want to point out to you the returns to A-share investors, whether it's me or anybody else, is a 670, sorry, a 22 IRR, 248 equity multiple, and a cash on cash was averaging about 8. So very strong deal. Anybody have any questions on this? I know I'm speed walking through it, but I have no choice because it's too in-depth. There are many other tabs here that feed into this, but I wanted to give you an idea of what a waterfall looks like that you need to create in order to understand with a 5-year model how to pay investors. This is nothing more than a fancy profit distribution model. Everybody get that? Any questions?
Robert, I do have one question. Did you
Sure.
have to a key principal, the PG to debt, or was it recourse debt or non-recourse debt that you guys assumed or obtained?
No, that's a great question. You can do any of the three. I mean, you can go and do an agency transaction on the debt, and there'll be it'd be non-recourse, right? Or as the GP, if you have the ability to do it, you can PG the deal, which I was able to do that. Part of that has to do, Kenneth, with my relationships with lenders, because my net worth was a little thin at the time. But they allowed me to do so. And then, and additionally, you could do a non-recourse deal, recourse, non-recourse, whichever way. But the other thing that you can do if you guys are starting out, if you don't have a strong net worth, you can partner up with somebody who's got a balance sheet that can come in and take a piece of the deal. They may not even do any work. They just put up their balance sheet and they sign on the dotted line to secure the deal. That make sense, Kenneth? That answer your question?
Yes, thank you.
You're welcome. You're welcome. Anybody else before I close this out? Okay, or forever hold your peace, because this is what a syndication model looks like. And the deal that I'm working at right now is actually blowing doors on this one, especially with the tax benefits. So, and this one did great. All right. So look, so we underwrote the deal. We did a simple underwriting. Then we went to a phase 2 underwriting, which I'm not showing you here. I will show you later. And then we structured a waterfall so we know what investors we're going to get. And now we had to determine how to get the money. And that is probably what the most, difficult thing can be when you're doing a deal. Anybody here, show me a show of hands. Who is kind of wary about raising equity? That kind of is a fearful thing for them. Is there anybody here that feels that way? Or you're all okay? Yes. Yeah, it's raising equity can be daunting and seems very challenging, but there's a secret to it. And the secret is really the deal speaks for itself. Because I don't think that there's anybody here on this call that if I showed them this deal, Talbot and County, back at that point, with a 21, 22 IRR or better, 6, 7, 8% cash on cash return, et cetera, that they wouldn't, if they had the liquidity, that they wouldn't take advantage of that deal. So the key here is to obviously get yourself in a situation where you can, get that deal to work well based on the proper cash flows in the waterfall. And if the numbers are there, then the deal will really raise itself. Now, Grant Cardone, a lot of you know who Grant Cardone is, and I ascribe to this approach that he uses. And he says, when you do a deal, you do it in 3 steps, in this order alone. And there's a lot of reasons why. Number 1, you find the deal. Number 2, you find the debt before the equity. Number 3, you find the equity. Kind of the real secret behind that is you got a great deal, you got it under contract, you've got the financing in place. Now it's just a function of going to investors saying, here's the projected returns, everything's in order. Do you want in? That's a lot easier than calling somebody and saying, hey, you want in my deal? I don't have any financing yet. I don't know what my interest rates are going to be. It's not under contract. That doesn't work. It must be done in that order in order to create success. Okay. So let's talk quickly about the simple approaches that we have. These, what I'm going to show you, are available on our website or in our group club, our mastermind, that you can use to raise your own capital. And this is what would be called a finance request package. Now, Kenneth will agree with me, I'm sure, on this. You guys do FRPs when you're putting a deal out to the street, Ken?
Absolutely.
Yeah. Why am I showing this to you? Because first of all, you should hire a broker like Ken or me or Ken, I guess, maybe in that order. But you should hire a broker because they'll really help. I mean, they charge you, yes, they do. But if you're new, they'll put this kind of a package together for you, which will give a summary of your deal. You got to know, guys, lenders are lazy. No offense. They want a nice, clean package, everything laid out for them. They see a lot of deals. And if you don't have something like this to share with them, you're going nowhere. So if you're going to do it yourself, we have this kind of a package available to you on a platform, which is there and available to you at any time that you can jump in and create a finance request package. And it's made up of things like this is the rent roll, this is the sources and uses, You just plug the numbers in, and you will have this package that you can then bring to your local lender. So you can, number two, get debt quotes on your deal, and then hopefully get your deal financed. And again, I think Kenneth will agree with me here. If you're starting out, you're probably better off to use an experienced debt broker than just trying to do it yourself. But if you do, we have the tools for you. Anybody have any questions on this really quick? It's a quick overview.
Yeah, there was just one question. Oh, you got
Sure.
Kenneth's question, right? He said, did you, I think you answered it. Did you have to get a key principal PG to the debt?
Yeah, did I answer that for you, Kenneth? On my,
Yes, yeah,
you're talking about the deal that the deal that I did. Yeah, Kenneth, even though if my balance sheet coming off that meltdown was kind of thin, I had the relationships in order to get my deal done,
understood, understood.
right? Okay, so there you go.
And Bob,
All right,
has his hand up. I don't know if it was a green or he has a question. You have a question, Bob?
who's that?
Bob McKinney from Boston? No, he's from Toronto, from Los Angeles.
Hey, Bob, go ahead.
Oh no, he was just putting his hand up for something else you said
Okay.
before.
All right. Well, yeah. So anyway, there we go. That's basically it. Without going, we have these templates available. All they are is plug and play. Oh, this is an example of what our phase two underwriting looks like. And they're all plug and play. As you can see, it gets into the detailed expenses, creates cap rates for you, creates everything you need, debt service cover. It's all here, and it's all available on our platform. All right. So we've now sourced the deal. Now we're trying to source the debt. And then the next thing is to source the equity, which everyone is always concerned about. And that is the way we do it is very simply with an equity teaser. And this is the equity teaser that was for those two units those buildings that I'm sharing with you. And we have this template as well available. In fact, the deal I'm working on right now is the exact same format. We took the template, put the pictures in, and the text in is almost identical. So all it does is go into the property, some experience, some background on me. It then talks about the neighborhood. It gives you a layout on where the property is. But this is the key part you want to know. This was the preliminary projections for the deal. We paid a 6 pref on the deal, 80% net profits up to a 10 ceiling, 60% after a 10 ceiling, 22 IRR, equity multiple 2.6, an amazing deal. And it's continued to hit on all the cylinders that we set out to in this deal. All the projected costs, et cetera. And the financing was 5 years, 1.5 interest only. I think I have 347 here. This must have been an iteration. I think we ended up a little higher on the rate. But here is an IRR calculation that we take from Excel. This is also included in my current deal. And this is what happens to a $100,000 investment in this deal. The annual income was about 9,000 projected for 100,000, 7,500, 8,100, 87, then 9,500, 9,486 plus a sale for 221. So your total returns were 254 on a $100,000 investment. This is generated directly by Excel. So there's nothing made up here. You just plug in the numbers and it generates this for you and you copy and paste it here. But again, this is available to you on the platform. We then go into any pictures, and I'm sorry to say, guys, but we left the toilet seat up here. So bad move there, but we still financed the deal. This is where it's located. And by the way, this is the old look before the new girlfriend. Anybody want to give me a vote? The new look or the old look? Let's give you hands for the new look. Nobody. Yeah, Paul. Thank you. Bob. Okay, great. All right. Well, yes, definitely I've had more feedback positive for the new look. So there we go. So Jeff likes the old look. Thanks, Jeff.
I just want to see a change. Yeah, I've seen you do that. Sean, everybody do new wins, man. People love long hair, you know?
It seems to be much more popular. I don't know why. So,
Yeah.
all right. Anyway, so that's an equity teaser. This template is available, easy to fill, easy to work with, and you can go out and raise your equity once you understand the waterfall on how the deal's going to work and how it will cash flow to investors. Does anybody have any questions on this? Okay, so let's move on from that. So now these are the 4 most important things that I think you really need to know, guys and gals. You need to know how to analyze multifamily investment properties. You need to understand capital stack and deal structuring. You need to understand creative financing strategies for multifamily deals. We teach 15 different creative financing strategies in our portfolio or in our class. And I want you to know something, that the deal I'm working on now has $4 million in seller financing at 5% interest only, and I'm syndicating the equity. So effectively speaking, again, I'm able to do this with no money out of my own pocket. I am absolutely living the strategies right now for my investors and for the whole deal that I preach and teach every day. I'm doing it as we speak. I'm walking my talk. So I'm not just one of these gurus out here that's never done it or done it once in their life. I do it over and over again, but there are methods to ways to get this done. Okay. So finally, the most important part, I think, if is a key to being successful is multifamily syndication strategies, because no matter how much money you have, and I went to a Grant Cardone event just recently, he said even himself, no matter how much money you have, you're always going to run out of money someday in doing real estate deals. So if you have an expertise in syndicating, you now have the golden ticket to be able to really raise as much equity as you need if you're doing good deals. Everybody follow me? Okay. All right. So look, I've invested a lot of money and time over the last 30 plus years in this business, probably invested between team and platforms and everything about $500,000 to be around the best in the industry and create this program to give you the most value for your investment dollar. In fact, you got to ask yourself, if you could have all your answers from one source, if you're learning this business without your own research, what would that be worth it to you? Now, if I created $1 million in net worth out of my first deal with no money out of my pocket, if it cost me $250,000 to get there, would that have been a good investment? Somebody, anybody? Yes. Does anybody? 250,000 to $1 million. That's a good
Yes.
investment, right? Okay. Well, nothing here for any of you that did answer. There is nothing here that's going to cost 250,000. I'm just saying, if you had all that knowledge and it translated into that, it would absolutely be worth the investment. So let's talk a little bit about our 6-week Finance Pro Bootcamp. I want to introduce it to you. It's pretty amazing. There's really nothing like it because it's a Finance Pro Bootcamp. Because, as I say, it's all in the numbers. Okay. And here's a breakdown of the modules and the price associated with them, or the value associated with them. Week 1 is Introduction to Multifamily Financing, $297. Week 2 is multifamily financing, debt financing, and this is $2,000 for this module alone. I actually get real live lenders on the call who talk about, because many of you have never sat in front of a lender before. Kenneth, you have, and I have, but there's certain things that lenders look for in sponsors and deals. And I have actual lenders. Actually, Ken, you know Rockland, do you know Rockland Trust? You're not in New England, are you?
No, I'm not.
Okay.
No.
Okay, so I've got multi-billion-dollar banks, senior vice presidents. I've got all kinds of, I got 2 or 3 different lenders. I've got a bridge lender. I've got an agency lender. I've got a bank lender. All they talk about what they look for in sponsors and deals. I mean, that's priceless. And that's $1,900 alone. It's probably worth more than that. Equity financing for multifamily properties. The other side of creative financing, $1,497. Analyzing multifamily properties, $2,500 is a value for that part of the program. How to look at a deal, but not just how to underwrite. Because you know what? I think Ken will also agree with me. I don't mean to keep hitting you, Ken, but underwriting really becomes just plug and play. It's not that big of a deal as everyone thinks it is. It's how you interpret the numbers, how you make choices and decisions based on what the numbers are telling you. Would you kind of agree with that, Ken?
No, 100%. It is definitely plug and play as long as you have a good model, because that's
Right,
essentially my opinion. If you
right.
have a model, you're plugging and playing, and as long as you make certain that you input the correct, numbers, you should be fine there.
Right. And so many gurus, we're going to teach you how to underwrite. Yeah, I mean, yeah, it's great and all, but if you really spend a little bit of time on it, it doesn't take that, it's not that big of a deal. So we want to know how to analyze and interpret numbers, okay? 2,500. Creative financing strategies. I told you we share 15 of them. 1,997. Negotiating financing terms. A lot of folks we don't get a lot of play on negotiation. Again, Ken, you probably know this. You can negotiate a deal right down to the commitment letter and still negotiate those terms.
All the time.
So all the time, right? So, but people don't know this stuff. So they get blindsided. This is the nitty-gritty of financing deals, guys. This is where it makes all the difference in your performance and your outcome. Multifamily syndication, that's 10 grand. That's the golden ticket. If you can syndicate a deal and understand how to do it, it can change your life. Total value is 20,000. If it was coming in off the street, it would be 99.97. But stick with me, guys, because I'm going to show you what I put together for you for the 4th of July. Okay, it's really awesome.
Hi guys, my name is
Listen to
Kevin
Kevin.
Callaghan. I just wanted to come on here and make a quick video, give a big shout out to Mr. Robert Damigella. I am a recent graduate of his Finance Insider course. Just to give you a quick background about myself, I am a real estate agent. My business has been sort of migrating towards the commercial side of things as of late. So what I was looking to do was learn a little bit more about the finance side of things, how to put these deals together, how to underwrite these deals. Be able to put these packages together to be able to present them to, lenders. What type of lender should I even talk to? These are questions that I had, and these are all things that I learned in the course. So whether you're coming from a business like mine, or if you're already in financing, or if you don't have any experience at all and you're just curious, I'd highly recommend this course. It's very informative. You'll even meet different lenders, have a chance to talk with them and ask them questions. So again, I would highly recommend this class. Robert, thank you again. Nelson, thank you. I appreciate everything that you taught us. I'm looking forward to the next course. Thank you, guys.
Thank you, Kevin. Kevin's awesome. Kevin closed his second deal in the end of last year. And Kevin, and I'm going to tell you what the biggest measure of my success with my students are. Kevin invited me to his wedding. So there you go. That to me tells me he's happy. So here's a little bit to talk to you about what we also include in for that 99.97 is we have a mastermind, which is really quite amazing. And it's on the school platform. We're going to include 60 days free here. Check this out, guys. This is our home. This is where we meet every Monday night to go over underwriting on deals. For example, if you look at the Monday uploads, you'll see that some deals got uploaded here. Yeah, this is David. David's the one that I told you about who's got a deal under contract, but he's still looking. This is, he uploaded the OM so we could review the deal, and I opine on the deal on Monday nights. I just clicked out of it. And then this is his underwriting model. I think he did a full underwriting on this deal, if I'm not mistaken. We'll take a quick look if it opens up here. Yeah, he did a 5-year pro forma, which he learned, and this is what model is available on the platform, guys. I know I'm throwing a lot at you, but there it is. He did it. He input the numbers. This deal's not covering, so we're still doing some more work on it, but this is what we make available to you guys. All the tools that you need to get out there and be successful, okay? This is our Monday night meeting. Look at all the deals everybody's uploading and we're going over every week, okay? Now, we have a community. We give updates on what's going on with the Fed, things like that on an ongoing basis, which we post every day. You can see this here. Massive tax breaks. What do we got? 10-year Treasury leap, different things like that. We keep everybody updated. We have a calendar, our members. We actually have a leaderboard, guys. We're competing here, guys. We're competing to see who's the #1 person out there finding deals to make you guys accountable. So you're out searching out and finding deals and getting them underwritten every step of the way along the process. When you get an LOI out, when you get a deal under contract, whatever, it allows you to move further up the leaderboard. So this is our club. Here's our classroom. Check this out. Look at all the stuff that's available to you as a member in our mastermind. Tutorials. The toolbox is right here where we have all of our underwriting templates, okay? Deal teaser template that I just showed you, finance request template, how to calculate IRR. I mean, this is a library here, guys. There's so much here. These are the quick calculators I just showed you that you can download and fill out. Every one of the 6-week, this is the whole program. Weekly club recordings. I mean, it's debt and lending, cost segregation. The underwriting models here are pretty amazing. You'll never find it anywhere because my analyst here at Marcus and Millichap, who's underwritten over $1 billion worth of deals, recorded these, stabilized, value add, mixed use, all here. Okay. So there's a ton. Contracts, you name it, it's all here. So this is our platform, guys, for our mastermind. So by signing up, the price is $99.97. By signing up, you also get 60 days free in the mastermind, which is terrific. And then in addition to that, and this is a mastermind like none other. You're going to get confidence in yourself and your deals. And by the way, all of our students, Kevin, David, many others, when you get a deal under contract, you don't have to wonder where you're going to go to get the financing. Ken, you're probably not going to want to like what I'm going to say, but we'll source your debt for you. We're a national firm. So if you say, hey, I want to buy a deal in California, we'll get the debt for you. That's part of being in this group. Okay. We've got an exclusive tools, all the templates, the underwriting models, blah, blah, blah. We're limited to 100 members. We've got about 50 right now. So what else makes us different is that not only will we teach you the skills, but if you run into a deal that you can't handle on your own, that you are over your skis, well, we're on your team and we will join up with you in your deal if it makes sense. If the deal works and looks like it makes sense, we can help you tackle it, help you fund it, help you be in your GP structure, whatever we need to get you through the process. So our goal is to arm each and every one of our members with knowledge, expertise, and tools to finance and acquire multifamily properties with or without the capital. So here's what you do. Call to action. You apply for the program. You're going to gain access to the knowledge to take advantage of all the deals that are maturing, all the loans, learn strategies that help you to build wealth. And then obviously the way to get started is to, oh, I forgot to add, guys, we're also going to throw in the digital version of the class. So not only do you take it live with me, get 60 days in the mastermind, but you're also then going to get the live program free, the recorded program free as part of your membership costs. So total value, if you add all that stuff up, about 46,000. Okay, let's listen to one of my students for a minute. Where you have a heart attack. It's not going to be 40.
Hi there, I'm Judith. I am new to real estate investing and I participated in the Finance Insider Multifamily Finance Bootcamp. And then I transitioned to the class. So I just need for you to know I am completely out of my element, but Bob and Nelson have really provided a lot of information as well as how engaged they are during the classes, answering every participant's question if they have any, and they're accessible afterwards if you have follow-up questions. They provided incredible resources that assist with underwriting, with securing financing. They had speakers that actually bolstered all of that as well, and you're able to network with not only like-minded people, but experienced investors that will guide you and direct you and let you know if you have a viable deal. So if you're on the fence about joining this group, you should definitely do it. Whether you're a seasoned investor or a newbie like myself, I highly recommend it.
Thank you, Judith. Judith's awesome. So guess what we're doing? It's the 4th of July, it just passed the other day, but our sale is still on. We're going to knock off $6,000, $39.97. First 10 applications accepted. You know, we'll do it this price. We have a class starting, guys, in 2 days. So if you guys really want to kickstart your journey in investing in multifamily properties and gain the tools that you need, because you're going to be competing against me, and I'll eat you alive if you don't know this stuff. Okay, so you might as well get on my team. If you want to get really good at this business, then we have a class starting Thursday night. The whole program is valued here. I don't know what, 20 grand, $9.95. We're going to give you a 60-day free multifamily mastermind club. You get a 53-page workbook. All here. All you got to do is jump in and sign up. That's simple. live, we've got this all set up. And if you jump in now for the class in the next 2 days, my tagline is it's all in the numbers, and it truly is. If you're one of the first 3 registrants today, here's the registration page. This is a QR code. Here's the registration page. You can go in here. And this goes through the entire program, all the modules. You can look at the goodies that come with it, and you can look at my background and then tons more testimonials. You can just click on the button right here, and it'll allow you to jump in and sign up if that's what you choose to do. We've got a couple different payment programs. So yeah, that's the deal. So take questions from you guys. And I think that any of you that are serious about being an investor in multifamily properties, you need this information. You need to have this kind of expertise, and you need to have the guidance of someone like myself who can get you through the process, help you underwrite, understand what the deal, what makes a deal work, how to structure the deal, and then help you go find the debt and the equity. Because without that, there's no chance. And I can help you to do that. So, anybody have any questions? We'll do a little Q&A period here, guys. Anybody have any questions that I can answer? And again, Grant Cardone said, if you don't have any questions, that means I gave you all the info you need. But I feel like somebody should have at least one question. There's still a dozen of us on the call at least. Anybody? Hey, Sean Kressler, I know we talked a lot. You had a few questions the other day. Is there anything else I can answer for you regarding our program? Kenneth? Paul, I'm here in the financial district downtown, just as an FYI.
Okay.
I'm on High Street.
I do have a couple of questions. First one, is it solely on multifamily, or do you ever consider mixed use developments as well? And is it just, that's one question. And the second question is, are you focused solely on, turnkey assets, or do you ever get into like construction, ground up development projects as well, or ground up multifamily?
Okay, well, it depends on if you're talking about the program versus my financing at Marcus. I mean, I finance every asset class. I finance industrial, hotels, as you saw. I finance ground up construction, value add deals, you name it. That's all within the purview and ability and skill set of what we do. In terms of this program is primarily focused on multifamily investing. There will be mixed use involved in that. There's a great video from my analyst who's, I told you, done $1 billion worth of underwriting in 6 months this year so far. And there will be definitely mixed use there. It's how let's say you have a restaurant on the ground floor, but apartments upstairs. How do you underwrite that deal? And that's all there for you to watch as part of the mastermind. And you get that for your first 60 days for free. And if you stay on, then we'd be reviewing deals for you. So does that answer your question?
Yes.
Okay, great. I see Sean says he's got 3 deals he's looking at. Well, Sean, you probably want to be in this program because honestly, if you're chewing through deals, I know you've got some changes coming at home right now that you shared with me that I won't share here, but you need to get yourself prepared, and this is probably an ideal way to do it. And considering we've got a class starting in 2 days, there's no better way for you to kick it off than to jump on that class and get started. As I mentioned to you, I think these are really cool t-shirts. So if you want one, you got to jump in now and sign up. We do have a limited number of seats. And I also want to point out to you, just in terms of logistics, we will meet for 6 weeks. It's 10 module program, 6 weeks for on a Thursday night. It usually ends up being an hour to probably more like an hour and a half. It starts out slower. It gives you a chance to get accustomed to some of the terms and the information and what we're teaching. And then by module, I think by week 3 or 4, probably week 3, I think, I then double it up and we do 2 modules a night. And it's hard. It's strong, it's tough, but you know what? This is the stuff you need to get in. I mean, I can't go longer than I actually do 7 weeks because I do a bonus module at the end. where you guys can, get some more additional information and kind of pull the whole thing together. But it's really not that much of a commitment. I mean, it's six weeks for $3,900. With 60 days in the mastermind, which I showed you with extraordinary resources to you. In addition to that, the tape version of it. So after you take the class and if you forget something, you can go back and watch it again. And then you got a really cool T-shirt if you sign up tonight. So if you want, go in there, use the QR code, or go to the link. You can also email Anastasia at Multifamily Finance Insider. She's on the sales team, or you can call her at that number below. Either way, there's 1, 2, 3, 4 different ways for you to reach out to us. There's really no excuse. I've given it to you guys at a really inexpensive price with all the bells and whistles. And I even think there's some stuff I skipped over because I think I can do a goal setting session for you. But you got to get into the next class because that starts in another 2 days. Anybody here look like they might have an interest in the upcoming class in 2 days? Because we can have someone reach out to you is why I ask. Nobody. Okay, no problem. If you decide,
I had one person ask me a question, Robert, in the side saying, how much is the mastermind separately? They might just do the mastermind.
the mastermind, it was right on there. Separately, it's 25,000 a year. But what we do for our students is we give them a significant discount if they decide to convert their trial period into a permanent period. So normally it's 25,000. You get my time, you get the team's time, you get all those resources and ongoing ability to be able to bring and underwrite and review deals, really 7 days a week. Yeah, so it would definitely be a lot less than 25 grand, but coming in for someone just off the street, generally the price is 25,000.
Okay, yeah, and Kenneth, I know you've been Andre, he said considering it, which Kenneth, it would be great to have you, man. I kind of look at myself as protector of this group of good people. So we have the best people in here. People like yourself, Kenneth, who are very experienced. Some rookies as well, but a lot of just great deal flow that's circulating through. So I'm just trying to put the URL in here.
And yeah, and Paul, if you join at a good, a slight advantage, no one else loses out, but you just happen to have me local. And if you're doing deals locally, I'm very much in tune and in touch with the local market in the 6 New England states. We work nationally. I do deals as far away as Los Angeles. But that's just one, or I happen just to be here. So if you decide you want to join, it'd be great, to be able to have someone on a local basis looking at deals.
Sure,
And there are
definitely.
folks. What's
I will
that?
be
Sorry.
reaching out. Yeah, I'm saying definitely. I took some notes over here and the contacts over here. I just have a few things to iron out, and I will be probably reaching out sometime to take it from there. But
Good.
timing, the next class coming is not gonna work for me because I have other commitments that are eating up a lot of my time at this point. But I'll definitely keep in touch, and maybe who knows, maybe we can grab a coffee or stop by sometimes and pick it from there.
Yeah, we may not have another class for another quarter. I only generally do about one a quarter, so I don't know when we'll have the next class. So if you can jump in here, this would be a great opportunity for you, and the timing is right. What else was I going to say? Yeah, no, it's pretty straightforward, and I find myself to be pretty accessible to you folks. So, but would love to have you, Ken. It would be great to have someone as experienced as yourself. I think we could help out a lot. Sean, I think this is ideal for you. I've spoken with you, and I think it would be necessary if you really want to chew through deals, understand and have all the tools. All the tools are in that platform where you can just go in. If you need an LOI template, if you need an underwriting model, if you need a quote matrix, you want to compare your quotes. I mean, it's all there. I mean, you want to know how to underwrite a deal. There's on-demand videos. We have research from Marcus and Millichap available to. We have 3 or 4 different links to deal sourcing platforms like Crexy and even the Marcus and Millichap site, which is available to you, but it's all in one place. So you can open up the platform and just stay there. You don't have to go anywhere. You don't have to search anything out. It's all in one place because I know what it takes to do a deal. And like I said, I am walking the talk. I am doing a $5.5 million deal with $4 million in seller financing at 5% interest only for 5 years. I'm not even going to give you the projected returns because I can't based upon the rules. Some of you I can, I know you prior, but I think Sean knows what the returns are. Am I right, Sean? No? Okay. Anyway,
By the way, Robert, if you can, just for anybody who's kind of on the fence today, if you can click on the link, Robert. He said that they are sweet, Sean said. I'm getting a call here, but if you can click on the link and just show just for and I don't know if how much we'll hold this for, but we have where you can do in the chat, you can click on the link in the group chat, Robert, and on your screen you can just show how we have different ways where they can lock in the price today. We did this today. I talked to Robert. Oh, not that one. It's the last link. I have dyslexia. And so this way it's better. There we go. And if you click in right here, guys, you'll see for a fraction of the cost, if you just want to lock it in, here you can walk through this, Robert, if you want.
yeah, you can, I mean, easy. You put it on 497 and pay 875 for 4 weeks, or 5 payments at 799 because you'll be paid up by the end of the program, or a one time of 39.97. Regardless of which you choose, you still, if you're the first three, you'll get a t-shirt. So I think the t-shirts are super cool. I would join just for the t-shirt, but that's just me. But yeah, so that's easy to do. You just jump in here. I even think that yeah, that's really straightforward. And as Jeff mentioned, in addition to that, what's in there is you can review everything we've discussed, all the modules before you sign up, and go from there. And yeah, love to see you all on Thursday night as we kick off another. I think this is cohort like 9 or 10, right, Jeff?
Yeah. And by the way, just so you guys know, because I've joined a lot of different masterminds too, like you have, Ken, and everything. Like we've had nobody who's come into this one not be happy with it. Like they've all come through, they've all stayed on. We've curated the right people, right? So it's not like we're doing it really for, we're just getting the right people to build Finance Insider. Like you're gonna be like, man, I got to join now, right? These are limited t-shirts, by the way. The t-shirts may be worth something later on down the road, but it's really just a special time as we're growing this all out. And it's cool to see Kevin's story, to see Judith, to see these people come in with a dream and then do it. Even Robert. Robert came in here. He told me he did it all. And then watching him do what he teaches as he's doing it, he's like, it's really cool. And I've been a part of a bunch of masterminds that you've been, and they're all great real estate. I have all these great connections, but it's cool to build out this. And we plan on doing events here in Miami. For people who are in the members, we're going to have exclusive events in Boston. So if you join for like $497, right? You just put it down. You're in Thursday's class. You get to get your feet wet for $500. And that way, and if you want, I could even put my number in here too. Usually Anastasia's in here, but you have any questions, I'll put my number in the chat as well. Okay.
Yeah, and thanks, Jeff. And by the way, guys, this isn't to pat myself on the back, but you have to, I hope you really understand, like the deal I'm working on right now. I absolutely sourced the deal, underwrote the deal, negotiated the deal, captured the 5% financing interest only for 5 years. Now I'm syndicating the deal, raising the equity, set the whole deal up on the platform, working with investors. I have done every bit of this, and I did it for a reason. Every bit of this syndication and this acquisition, I am doing myself. There is nothing about it that I don't know. I'm working with the securities attorneys because there's rules around this stuff that we teach in our program that if you don't know, you can get yourself in a lot of trouble. Okay. And as Sean said, I can't, he said in the chat box, I can't share the numbers with some of you that I don't know, but the numbers are extraordinary on this deal. And I can show you how to get deals put together that can give you those kind of returns. So yeah, love to have you guys join me. Let's get 2 or 3. Let me give away 3 t-shirts and we'll kick off on Thursday night. and it'll be just like this. The only difference is you guys will be on camera and we'll actually interact and speak on an ongoing, like I am with Jeff. I don't know if you guys can see Jeff, but same way that I am with Jeff, we'll be on camera, talking and integrating. And oh, I know what else I wanted to mention, guys, as well. Everyone thinks that they have to source deals, and it's an important component to doing this business, okay? But when you get involved in our mastermind, you happen to find out that there are other people that are sourcing deals that you can join up on, myself included. I have so many of my students that are jumping into my deal. They're just getting in. So they're having an opportunity to see step by step how I go through the process and then make some money doing it. It's ultimately it'll pay for the program. Okay, and that there are other folks in there. Paul, there are some folks here in that are from the local area that are doing deals I'm working with. I'm not going to make this promise to anybody I'm about to tell you right now, but I will tell you a real story, and I wish David were on here today. He couldn't make it. But David and I, Sunday morning at 7 a.m., we're on going over one of his deals. He's a single dad. He didn't have time to do it during the week. So I carved out half an hour at 7 a.m. on Sunday morning, and we started chewing through his deal. Now, again, don't expect that from me very often. It was a unique circumstance. He's got a deal that he's got under contract. But you know, we do what we got to do, guys. This is definitely a contact sport, and you got to be tough, and you got to know what the hell you're doing. And if you can do that and learn this stuff, it'll make all the difference in the world. So let's get a
And
few of you guys, gals in there. Go ahead.
What are you gonna say, Paul?
I just want to say that there's something that I wanted to say, and if I don't say, I won't be doing anybody justice over here. I've done a lot of multifamily investment transactions and stuff like that. I myself am a real estate agent over the years, and two things I would say here as I sat here and watching this presentation, looking at all the spreadsheets and everything. One, everything that you need to make multifamily finance transaction or anything related to commercial real estate in general is in this presentation. Everything you need. And two, I would say that the price is more than right. The price is actually worth it. Everything is in there. And there's no way anyone is gonna go through this program and come out and face a deal the next day and say, oh, I don't know what this is, what this meant. Everything is in here. I saw it, I watch everything closely. This is a great program for me personally, just because the time isn't all right. Right now, you know, my brokerage, we're going through a lot of training these weeks, these next 8 weeks. So it's kind of a heavy schedule on me. But if anybody is there doubting about this, I've seen a lot of, you know, presentation, a lot of programs like this, but this one is complete. I can vouch for everything on that. There's no way you can get on this and get and say you don't know about something. I just feel like I have to say this because I'm on the market. I've done a lot of transactions. I'm talking about multi-million-dollar transactions. Actually, last year I came close to closing on a $365 million transaction. It's just that something comes short of it. So I know what this is, and if anybody's doubting that, I'll tell you this is the deal.
Wow. Wow, Paul, thank you so much, man. I will tell you, Paul, do we know each other? Have we ever met?
No, we've never met. I've never heard of you. It's funny, but probably you
Yeah.
know my broker. But yeah, best. But this is fantastic. Anybody's
Wow.
if you just doubt for someone over there, I'm telling them jump in.
Wow. Well, thank you, Paul. I think go ahead, Jeff. No, go ahead.
No, was this your first webinar, Paul, or you been on other webinars or workshops that Robert's done?
I do watch webinars, but also in my office. So we have a lot of, like my brokerage, they bring in a lot of experts from across the country. Sometimes we do have a lot of classes and stuff like that. And I've done deals actually. And when we used to hire like underwriters, we have our own private underwriters and stuff like that. But we just get in point where we have to learn to do it ourselves to be comfortable with it, and we did it. So when I was looking at all these spreadsheets and everything is there.
Yeah, your mouth is watering, right? It's so good. By the way, and by the way, one thing I want to say about Robert too, just go, and I know I'm the guy who's supposed to say stuff, but it doesn't even matter. I didn't even know Robert went with David. David's a great guy in our community. Literally single dad. He has stuff going on. It wasn't the perfect time for him to join either, Paul. And he joined, and now he's working harder than anybody else has done before. Sunday mornings, and it all leads from the leader, right? All falls on the leader of Robert. And Robert gives and people give. Not that it's gonna happen, but like, man, and by the way, I've seen Robert do a lot of stuff behind the scenes. That's what your character is when it is. And like, guys, we know we've all been on these programs in real estate. To have someone who really cares about it. Robert, I'll tell a story. I was like, Robert, I can't make sense. He said, hey, Jeff, you know me, you got to call me. And I don't want to call Robert. I don't want to bother him, right? And I know he has so much stuff doing. So it's just good. Not that we're going to always have that, but it's that type of community. And then when David is strong, he'll help someone. Each one people help someone. And we're really building up that. So yeah, Paul, I appreciate you saying that 100%.
And I think
Oh.
one of the key values that looks like an add-on, but it's a very central element here is the creative financing element of it. That you can pay enough for creative financing because it's open. You can do so much. You can actually get a property for free if you know what you're doing, right? So for them to add this to this program and keep it below 5,000, I don't know. If somebody knows what it is, you know that this is more than worth it. I'm
Yes.
definitely I'm gonna chop this. I'm gonna basically tell my colleagues about this. Actually, to be honest with you.
And Paul, thank you so much for that. You know what I want what I want to add to what you say? Have you ever heard the term "you don't know what you don't know"?
Yeah, true. Yeah.
Right, right. You get it. You understand. So many folks get on here, they just can't grasp that this is it. This is it. Because this is what they need. It's all in the numbers. You know what I mean? I think we lost Paul.
By the way,
No,
yeah,
I'm here. Yes, I'll say yes. I
Paul,
hear you.
where's your accent from? I love your accent. I love your voice.
Actually, I'm originally from Africa. I've been in Boston for over the last 24 years, but I still haven't changed my accent. Somebody needs to help me.
That's
But
cool.
it's a French accent, actually.
Yeah, I just hired somebody actually. I just did some work on Upwork with someone from Africa,
Oh,
and
okay.
they literally live there right now. And it was his name's Toby. He's a awesome kid, save kid, really smart kid. So
Right.
it reminded me of him, and it was just really cool.
All
Thank
right.
you.
Well, look, if nobody, Paul, I can't thank you enough for those comments.
No, it's just
John,
doing
I
good
can,
for everybody here, to be honest with you. Some people have never been real estate, so they might not understand. Like I say, I'm going to tell my colleagues about it because I know some colleagues that are looking up to me, and I'm looking up to other ones. If anybody want to jump on this, they'll be reaching out to you. Fantastic.
all right. That'd be greatly
Paul,
appreciated.
text
Thank
me
you.
too, Paul, because I'm building out for Finance Insider. If you do have that network, like an affiliate program eventually for him, once you join the program, you will get a link that how the school's set up. That you can do a link where when you share it to the right people, we don't want to just share it to anybody. You
Right.
can get a percentage. So obviously you're not joining right now, but if you do join now, it's $500, right? And then you get this link, you share it, then you get a little percentage that we can do. We're building. We're a little careful of that, but from everything knowing, I'm just bringing that up for you, and that could be for other people later on. But that's what I was saying. Text me because I was looking for a few flag carriers who understand the importance of this program to really kind of share the word because that's how it gets shared the best. So maybe that could be you.
Appreciate it.
All right. All right. Well, unless anybody has any more questions, I'm going to let all of you go. I'm going to actually, Paul, you'll appreciate it. I'm going to go see if I can jump on the train in South Station.
All right. Thank you so much.
And by the
My
way,
pleasure.
Sean Chrysler said, being with GC's Real Estate Club, this is above and beyond all that. It's there. Yes. So I'll answer. Can I answer that first?
Sure.
Yes. So Sean, it is Grant's. I love Grant. We go to Grant's events, right?
I'm a member.
He's a member, right? I actually joined to be a member in the beginning, and I got on one call, and I just felt like it wasn't deep enough, right? There wasn't any of that, and it was a big, like, I didn't want to invest in Cardinal Capital. I want to do my own deals, right? This is made to do your own deals. So yeah, it's really, really good. We love Grant. Grant's a great guy. Grant changed my life with a video on depression back in the day, so I have a soft spot for Grant. But when it comes to real estate, Obviously he knows a lot. And Robert went down to the pitcher deal, right? And you pitched the last deal, right?
Yeah, he's the one I'm working on. He said it was a no-brainer.
Yeah, no brainer. The deal that he got. So it's cool. We still work side and side. This one's just better, Sean, if you're like on your own, kind of, and you need a little bit of support and stuff to plug and play. It's literally that, there's things to find the deals in it. It's good, man. I'm excited about it because I just have seen people win in it. And this is a great group, by the way. We have some quality. Ken, Sean, even Paul. Like sometimes like, I don't know. You guys are all like very qualified to join. I really want to see all you guys in the group getting deals done, being it, sharing, being active. I can see it already. So I know there's a little hesitation. It's not the right time. There's things going on. I'll say this, there's either, day one or one day, right? And a lot of times today's day one, I would need to liquidate more if my traditional IRA to join. Yeah, I think that'd be a good deal. Oh, we got Brett here too. We're running a webinar right now for this.
Buy everything.
Yeah, see, there you go. That's Brett for you. All right.
Yeah. All right, guys. I'm gonna make it over there. It was a pleasure meeting you all. I look forward to seeing some of you or all of you on Thursday night and wearing your t-shirt if you do join up. All right, guys. Thank you.